A very good afternoon. Let's take a look at the markets. The Asian markets we track were all closed today due to the May Day holidays. The US markets ended on a positive note at the close of last week. Investors were said to be more optimistic about the prospect of the US-China trade war simmering down, as there was suggestion that the two sides could meet at the negotiating table to discuss tariffs. Chinese officials did signal a willingness to reopen talks with Washington, although it's still not clear when those talks will take place. On Sunday, President Donald Trump said he was looking to strike a fair deal with China without going into specifics. The Dow Jones Industrial Average rose by 1.4%. The S&P 500 gained 1.5%, while the Nasdaq Composite Index closed up 1.51%. Looking at local indicators, we see that the all-share index is trading up 0.1% at 92,458 index points. On the currency front, we see that the rand is trading at 18.29 vis-a-vis the dollar, 20.74 against the euro and 24.35 against the British pound. Looking at the commodities, we see that gold is trading at $3,314 an ounce, platinum at $967 an ounce, while Brent crude oil is trading at $60.46 a barrel. All right, let's get into conversation with Gary Boyson. He's a portfolio manager at Rand Swiss. Thanks very much, Gary, for joining us. So volume trade in global stocks is expected to be quite thin today, given that a number of regions are on holiday for May Day, namely Europe and Asia. But I suppose a key driver, among others, is going to be what transpires in terms of those US-China trade talks.
Yeah, I think that's definitely the case. So we can feel that the volume is very low on the exchange day. China, as you said, closed. Japan closed. London Stock Exchange closed for the May Day public holiday. Stock exchanges like Korea also closed. So very limited direction. And I think anything that you're seeing on the market today, I mean, almost take it with a pinch of salt. There has been, I think, optimism. People have been, cautiously optimistic on Chinese equities and the idea that we might see some sort of trade deal coming through, although it's still very early days. And I think if you take a step back and look at the US administration and what their ultimate goal is in trying to suppress trade with China, and from our perspective, that goal is certainly to try and limit China's access to technology, specifically anything to do with AI, trying to limit the amount of chips that they can access, and really seeing China as the serious competitor on the global stage. I think it's maybe very early days to call an end to the trade war. We're obviously still in the 90-day pause, and China still has significant tariffs that are going to be implemented. So I think cautious trading today, low volumes, as you said. So I think we'd be careful more than anything else.
Yeah. So that cautious trading and taking with a pinch of salt that you advise, does that apply to the local market as well, which is sort of hesitantly up at the moment?
Yes, our local market, really most of the direction is coming from the likes of the gold miners. So we've got a lot of the gold miners up significantly today. It's not really because the gold price, the gold price is up 2.3%. We're trading, back above $3,300 an ounce, in dollar terms. We also have the rand appreciating slightly. So we've got the local currency now breaking the 18.30 to the US dollar level. And that has, the resource index is doing most of the work. So resource index up 2.72%. Every other sub-index is down today. So we've got the likes of the industrial index down 1.12%. But part of that, again, is going to come from the lack of direction from things like like Tencent, for example, which drives the direction of the Naspers process pair. Our financial index also down around 0.5%. That should actually be strengthening if you consider, the pricing around our local banks, for example, and how they will benefit from a slightly stronger currency. So, like I said, some strange moves on the market today, and I probably wouldn't read too much into one day's movement.
Yeah. Okay, so then let's speculate then. So midweek, the US Fed is going to be making a call on rates. What's the expectation on how they'll be moving on that day?
Yeah, so overwhelming, the expectation is no change. And I think we understand why as well. So if you look at the Fed funds futures, 96% chance of an unchanged decision by the Fed. And this makes sense. So we got obviously the labor market numbers out, US non-farm payroll numbers on Friday. And the labor market in the US is very, very strong. At the same time, however, there's a high level of uncertainty in what the ultimate impact of these new tariff policies are going to be. Our base case scenario is that we will still see 325 basis points and 0.25% cuts this year out till December, but one of them is probably not going to happen on Wednesday. We've had a lot of noise around the idea of Jerome Powell being removed as the head of the Fed. His tenure will extend into May 2026, and I think that that position should be secure until that level, and I think he is almost slightly more hawkish than you would maybe expect given the stronger labor market data and given inflation, specifically looking at the oil price, for example, where we've got Saudi Arabia and OPEC Plus actually increasing output, again surprisingly over the weekend, adding another at least 411,000 barrels per day scheduled for increase in June, and the idea that we might have slower global trade. That should speak to a more moderate inflation picture, but at this stage, we can't see the US cutting rates on Wednesday. So I think they want to see how much of the GDP figures that we got, how much of these inflation figures are really a result of front loading of imports ahead of the announcement of tariffs and the implementation of tariffs. So I think from the Fed, it's got to be a wait and see approach this month, but we'll see in further meetings whether there is a bit of scope to reduce interest rates.
Yeah, unfortunately, we're limited for time, but a very quick question on Warren Buffett. We understand that he's hanging up the towel as CEO and chairman of Berkshire Hathaway. He's had a very successful career as a tradesman, having amounted a lot of money. He's worth about $170 billion. What was the secret to his success?
What's the secret? Well, I think time is normally the secret. Remember, he's stepping down because he's 94 years old. He's only going to step down at the end of the year. I think his birthday's in August. So he'll be 95 when he resigns. And really, one of the things that markets create an enormous amount of value for people over long periods of time. And, being at the helm of Berkshire Hathaway for 60 years, he has had absolutely spectacular performance over that period, significantly outperforming the S&P 500. But I suppose it really, a lot of that wealth is generated over time and also just sensible economic decisions. And one of these sensible decisions, he says, is stepping down. He says he would love to stay on, but he believes Berkshire Hathaway, the company, will be more ably guided by Greg Abel, who has been marked as a successor from 2001. So this is while it was unexpected, and I believe only his children actually knew about the announcement, and even the soon-to-be CEO was kind of hit out of left field. It is I think a move that needed to be made just because of his age, and yeah, I think it's definitely the end of an era, one of the greatest investors of all time.
Wow, 6 decades, that's a long time. Thanks very much, Gary, for your time and insights. As always, that was Gary Boyson. He's a portfolio manager at Rand Swiss.